In the March of 2020, a news triggered a panic among lakhs of people associated with the Yes Bank, which had over 1,000 branches across the country then. The private lender was collapsing due to alleged irregularities and bad loans. It was then that the RBI stepped in. A restructuring plan was announced with the central bank superseding the commercial bank's board. Later, the government announced that the SBI would buy a 49% stake in the ailing private lender. 2 years on, financial results show that the bank's health has improved, but a decision taken by the bank and RBI administrator on March 14, 2020 has put over 2 lakh depositors in a fix. The decision was to write off its additional Tier 1 or AT-1 bonds worth around 8,415 crore rupees. And this decision has now been overturned by the High Court. The bank, on its part, said that it would appeal the order in the Supreme Court. But what are these AT-1 bonds that have led to this legal battle? Let's understand. AT-1 are a type of unsecured perpetual bonds that banks issue to shore up their core capital base and comply with Basel III norms. These norms were formulated after a string of banks collapsed in the 2008-2009 global financial crisis and called for maintaining stronger balance sheets. Under Basel III norms, banks are required to maintain capital at a minimum ratio of 11.5% of their risk-weighted loans. Of this, 9.5% needs to be in Tier 1 capital. AT-1 bonds fall under this type of capital. The AT-1 bonds are long-term and do not carry any maturity date. They also attract large investments as their face value is 10 lakh rupees per bond. These bonds carry call options that allow banks to redeem them after 5 or 10 years. They also carry a high rate of interest around 9 to 9.5%. But these bonds also carry a higher risk. The banks are not obliged to use the call option and they can opt to pay only interest on these bonds for eternity. They can also skip interest payouts for a particular year or even reduce the bond's face value without informing the investors. Moreover, if the RBI feels that the bank is on the brink of collapse, they can also simply ask the bank to cancel the outstanding AT-1 bonds. The same happened in the case of Yes Bank. Bonds worth 8,415 crore rupees were written off, leaving investors in a lurch. Now, with the court saying that the bank did not have the authority to write off the bonds, what becomes of the legal tussle remains to be seen.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.